I'm delighted to be here today speaking about a topic which is extremely important to all of us. This world is a very complex world. But within this, I want to focus on Asia's changing trade map because a lot of changes are happening. And what I come out with towards the end of my presentation is very simple. There are opportunities out there for those who look carefully and who persevere patiently. But I hope in the next 20 minutes, I can convince you of the opportunities that there still are in this very complex global backdrop. But first, the global backdrop. If there's one thing that is consistent across every theme I'm tracking, it's uncertainty. This is a chart which basically shows this global policy uncertainty index. And I'm surprised when I saw this first, I was really surprised to see that we're at uncertainty levels which are the highest in the last 30 years. Policy uncertainty is even higher than during the 2008 global financial crisis or even the COVID situation, which was extremely disruptive for all of us. What we are seeing right now is actually a lot more uncertainty in global markets. And what is this source of uncertainty? A couple of points. There is trade-related news about tariffs. It's not just that the tariff structure is extremely opaque, but it's also ever-changing. It's constantly changing. It's very hard to make any decision when you have such a fast-changing tariff structure. The second one is the ongoing US government shutdown, on the back of which we've basically had no data coming out of the US for a very long time. But thankfully, if you look at the news for the last couple of hours, I think we're towards the end of that. We may be seeing a US government reopening very shortly. And then, of course, there are many other geopolitical risks. We have conflicts in many parts of the world, which do not help people who are navigating global markets. Let's start with tariffs, because that's the big theme of the year. And here I'm just not looking at the tariffs imposed by the US on Asia, but I'm actually looking at the tariff advantage which the rest of the world have on China. The funny thing here is that it's changing very rapidly. When I made this chart in the middle of August and I only had those black bars with me, it seemed to me that the US had applied tariffs on China, which were much higher than tariffs on other countries. Other countries in Asia were meant to have a tariff advantage over China, and a lot of people were thinking on the back of that, manufacturing will move away from China and will come to other parts of Asia. But lo and behold, by the time it was 30th October, this chart had changed, and we saw these red bars coming, showing that the tariff advantage which the rest of the world had with China had actually halved. And look at poor India on the other end, which basically saw a big flip in fortunes from having a tariff advantage to having a severe tariff disadvantage. This basically happened towards the end of October when US and China had their trade agreement, and many of the tariffs, for example, the fentanyl tariff on China was actually halved. So again, my point is that is changing very quickly. You can't make any business decisions here. And then the biggest economies of the world, the US and China, seem to have very complex economic situation, which is quite hard to read. Look at US, for example. There are as many people who will tell you that growth is rising, as many who will tell you growth is falling. The truth is, if you look at GDP growth, you look at retail sales, things look great. But as soon as you look at labor markets, you can see the slowing. So there's a lot of confusion on what's really happening to growth in the US. And I would say similarly for prices, for inflation. If you look at some of the headline numbers, they look pretty all right. It doesn't look like US is having very high inflation. But when you look at some of the leading indicators, for example, input prices, it seems inflationary environment is changing and headline inflation could rise very quickly. In fact, on the back of that, global markets are pretty confused. We had the Fed meeting a couple of weeks ago, which turned out to be a bit hawkish. And since then, markets are repricing for a less deep Fed rate cutting cycle, which on the whole is leading to broader dollar strength. And whenever you see this sudden dollar strength, the emerging markets currencies become a little volatile. So this is one area of volatility that emerging markets are having because of uncertainty of the US's business cycle. The exchange rate is coming into some pressure. And then there is China, which is trying to rebalance between consumption and investment. What we see here is that China household consumption is running lower than trend, but its investment, its manufacturing investment, is running higher than trend. What this really means is that many emerging markets, other countries in Asia who are trying to build their manufacturing sector, are finding it very hard because they are getting very efficient Chinese imports into their economy. And this is something they will have to grapple with. I pointed out all the reasons why, things look a little uncertain and we don't really have a clear theme. But we do, because there is a bigger picture in the backdrop, which is giving us a signal of slow and gradual but important changes that are happening. And I want to focus the next few slides on this bigger picture. This is one of my favorite charts. It basically summarizes the world for me. It's this huge imbalance that we have. US advanced economies as huge importers and consumers, the blue part. And then you have China, the big exporter, the big manufacturer dominating world trade. And this is what has created a lot of friction, and something needs to change here. What will change? My sense is advanced economies will remain big consumers. They have the highest GDP per capita. They have high consumer power. They're not going to give that away. So I think they will remain big importers. But the exporters may have to see some more diversification. A lot more manufacturers should come in alongside China to make this chart look a little bit more balanced compared to what it is looking at this point of time. And here, I want to emphasize that I think it's ASEAN's time. I think the region ASEAN is here to grasp this big opportunity. And if they play it right, the next decade could be ASEAN's. Let me explain a little more, what I'm trying to say. When we look at ASEAN's relationship with the US and with the advanced economies, we can see that it's rising, and it's rising rapidly, particularly in the last 1 to 2 years. Interestingly, ASEAN's exports to the US is today higher than China's exports to the US. The US is now buying more from ASEAN than it's buying from China. This last happened in 2001. After several decades, it's happened again. And it's not just ASEAN's relationship with the US. It's also ASEAN's relationship with other advanced economies. If you look at the kind of trade deals that ASEAN is signing, it is trying to build business relationship with many countries. My favorite recent example is Indonesia. Just a few months ago, Indonesia had a free trade agreement with just 6 countries. But then it signed a trade deal with EU, and now that trade deal is in the parliament. Once it gets ratified, Indonesia will have a trade deal with 33 countries. So many more countries will be open to getting imports from Indonesia, and Indonesia can rise as a manufacturing hub. So ASEAN is building its relationship with a lot of advanced economies. But ASEAN is also looking at China and building its relationship with China as well. And this is why it's interesting. It's a region which is working with both advanced economies and China. We find that ASEAN has a wage advantage compared to China. It had it in 2009, but about 15 years down the line, the wage advantage has only increased. Today, the cost of production in ASEAN for labor-intensive goods is lower than the cost of production in China. And this is something that China has noticed, because we see a lot of FDI flowing from China into ASEAN. The big beneficiaries, as you can see on the chart on the right, have been Thailand, Vietnam, Indonesia, Malaysia, Singapore, maybe not Philippines so far, but we can see that China is giving a lot of FDI to ASEAN, and basically Chinese companies producing a lot more in ASEAN than we had seen in the past. These charts actually look at the same thing from ASEAN's perspective. And it's really interesting, because what we find is that today, ASEAN's trade deficit with China is rising. Actually, ASEAN buys a lot from China, particularly intermediate goods, capital goods. But then it adds value to it, and then it sells it further to advanced economies, and it has a roaring trade surplus with the rest of the world. And the chart on the right really shows that yes, today, ASEAN's trade deficit with China is rising, but its trade surplus with the rest of the world is rising even more, which basically means that ASEAN is a net beneficiary of all the global movement that is happening. Of course, not everyone benefits equally. We see Malaysia, Vietnam, and Indonesia have benefited the most so far, even Singapore, not that much Thailand and Philippines, but of course, this is a dynamic chart. It keeps changing. My short point here is that ASEAN is in this very sweet spot. It has a wage advantage vis-a-vis China. Chinese companies are giving a lot more FDI to ASEAN. ASEAN is producing and selling it to advanced economies. And in that process, ASEAN is growing. But now I'm going to talk about a bit of caution that is needed. All of this is happening, but all of this is happening gradually. Because the truth is that China's global market share in manufacturing keeps on climbing. China is not losing its dominance in world trade. It's actually only rising. It's only on the second derivative that China is ceding space to regions like ASEAN. Because when I look at chemicals and vehicles, which are more high-tech, or if I look at apparel and electronics, which are more mid-tech, I find that China continues to gain global market share. And then when I see that China is giving FDI to regions such as ASEAN, I find that yes, it is, and it's rising, but it's still small. It still has a long way to go. It's still about just 1% of its GDP. Like, look at Japan. 4% of its GDP is the kind of FDI it gives to the rest of the world. So China is giving more FDI to the world, but it still has a long way to go, and its dominance in manufacturing for now continues. This was something which I thought was worth mentioning. My sense is that China has a lot more bargaining power in the world today than a lot of people realize. I think we figured it out with rare earths materials when we realized that the US wants China's rare earths materials. But there's something else as well. It's US corporate interests. Now, US exports to China, yes, and that's the black line. But US corporates sell to China as well, and they sell a lot more. That's the red line. What does this mean? I would say, think of a cup of coffee from Starbucks. US company selling something in China. A lot of US companies have very strong business interests in China. And then when I look at investments, I find that US investment in China is much higher than China's corporate investment in the US. So it's not just about trade, it's also about US corporate interest, which continues to give China a very strong bargaining power in this very dynamic world. So, what we covered so far was that there are opportunities for regions like ASEAN. These are opportunities which we are seeing are unfolding, but that does not mean China is losing its dominance. It's just that alongside China's dominance, ASEAN is also getting opportunities to produce and grow. But I want to come back to ASEAN and focus on my last few slides. And actually, I would say this is my favorite section because honestly, I'm tired talking about tariffs and trade. That's all we've been talking about for the last year. There's something which is beyond goods trade, and that is services trade. The world is deglobalizing in goods trade, but it is globalizing even more rapidly than before in services trade. Look at the number of trade restrictions. We have rising trade restrictions in goods. They are at very high levels. But we don't have that kind of restrictions in services trade. Look at FDI flows around the world. Right now, we're in a world where services FDI has outpaced goods manufacturing FDI. So with all of this digitization, financial innovation, services can be a big way for countries to grow. Now, who's really grasping this opportunity? I think in Asia, India is one country which is really grasping this opportunity. India for the last few decades was selling a lot of IT services exports to advanced economies like the US. Recently, it has also started selling professional exports, services exports to the US. And this is not just computer services, but it's things like chartered accountant, HR, designing, engineering. You can sell all of this, and India is selling all of this to advanced economies. Within ASEAN, the country which is leading the pack is Philippines. If you recall, some of the charts I showed in the past basically showed that Philippines is not really rising very quickly as a goods manufacturer and exporter. but it's actually rising quite rapidly as a services producer and exporter. This has got Philippines a lot of FX reserves. Its currency has stabilized, its growth has stabilized, and services is one way for Philippines to grow. And there are other economies, like, for example, Thailand, who are also trying to follow in the footsteps and trying to get more in this globalization of services trade. And it's not just selling computer or professional services around the world. Another service which can grow very rapidly in ASEAN is financial wealth management. If you look at financial assets in ASEAN, they are on the rise. And some of the projections we do between 2022 and 2030 suggest to us that aggregate financial wealth in ASEAN will probably rise faster than it will rise in the US. And growth is all about opportunity. So this is the second service which I think can be very interesting for the ASEAN region. And finally, we have tourism services. We find Thailand, Singapore, Malaysia very, very open to tourism. The number of tourists are rising, and the importance of these sectors in their GDP is increasing as well. So there you go. ASEAN is a region which is benefiting from a new goods opportunity, with China putting more FDI into ASEAN, producing in ASEAN and selling to the world. But it is also benefiting because it's open to services as well, and a variety of services: computer, professional, wealth management, and tourism. So I told you at the start of my presentation, there are opportunities if we look carefully and if we persevere patiently. I'm going to end with that. Thank you very much for your time. I have really enjoyed this session. Thank you so much.
Thank you so much, Ms. Bhandari.